Hello and welcome to Moneylife. This is Sucheta Dalal. This week, we're going to talk about asset reconstruction companies and the controversies and questions that surround them. Now, sure, some of you are asking, what are asset reconstruction companies? Most of us, as ordinary investors or people, don't even come across asset reconstruction companies. Someone I know thought that they help in reconstruction of buildings. Actually, they're nothing of that sort. They were designed to clean up the banking sector by resolving bad loans or what are called non-performing assets. So they're known mainly to the financial, banking, and investment sector, and we have nothing to do with it. All this changed in 2018 after a series of defaults, starting with ILFS, Infrastructure Leasing and Financial Services, Diwan Housing, HDIL, and so many more, including groups in Calcutta. Now, in all these cases, there were home buyers who had bought. The company was a realty company or a developer who had also borrowed. Everything went to the bankruptcy court. And who were the big losers? People who had fixed deposits, people who had non-convertible debentures, people who had equity, and of course, the home buyers who were really badly hurt because your home is your lifetime saving, right? Now, where do ARCs come into the picture? Because many of these bad loans were sold to ARCs. And ARCs did all kinds of dodgy deals. I'm not saying it, the regulator has said it, in order to help people who are either in the industry or the guys who caused the bad loans in the first place to get them back at a discount using official processes like the bankruptcy process. Now, all this has come out in the public domain. Kind of in 29th May 2024, the Reserve Bank of India cracked down on Edelweiss Asset Reconstruction Company. This is after an investigation that has been going on from 2021, where Edelweiss had denied any wrongdoing. So RBI took very stringent action. They barred Edelweiss ARC, I'm going to call asset reconstruction companies ARCs, from acquiring any financial assets. That's no new loans to be acquired. And they said this whole engagement process of 3 years had led to all kinds of findings. These findings, in fact, seem to be made public when Mr. Swaminathan, J. Swaminathan, Deputy Governor of the Reserve Bank of India, made a public speech where he raised the regulators' concerns about ARCs in general, that ARCs were acting as a conduit for evergreening bad loans. What is evergreening bad loans? You give a fresh loan to hide a previous loan so that the borrower pretends to repay. The size of the problem increases, but for a long time, both the lender and the borrower and the regulator pretend that all is well with the loan until it grows so big that it collapses, and it's happened over and over again. So now ARCs, which are supposed to help with recovery, are acting as conduits for evergreening these loans. Who says it? The regulator. He also said that they were entering into a series of structured transactions to circumvent RBI regulations which demand transparency. In fact, structured as in probably layering, probably convoluted. I'll give you examples later. But Mr. Swaminathan said things were so bad that he was even questioning the business model of ARCs, saying that all they were doing is one-time settlement and rescheduling debt, both of which should be done by the lenders, whether they are non-banking finance companies or they are banks. He also said ARCs were found to be warehousing debt. What is warehousing debt? They take a bunch of loans from the bank, bad loans. Bank is pretending it's out of their books because they've sold them at a discount to an ARC. The ARC is not really buying them. They're only earning a fee to allow the bank to show cleaner books. The bank holds on to collateral and is also responsible for recovery, which means it's just a dodgy arrangement to push the loans temporarily out of the bank's books, which means you're fooling the regulator, you're fooling investors in the banks. The deputy governor also alluded to deals where assets were sold to group entities being the borrower's group entities, without placing proposals before independent committees or subject them to scrutiny about related party transactions. He also said the valuation of security receipts issued against these loans were also very iffy, and incorrect information was reported to the Central Repository for Information on Large Credits. You wonder, were they doing anything right at all? Now, RBI followed this up. Obviously, all these are serious things. So by October, it came up with a stringent set of regulations, which are going to be effective in Jan 2025. I'll come to that later. Keep in mind that 27 ARCs were registered with RBI. RBI has been keeping quiet, not really acting against them. Then there's this discovery process that happens from 2021. There is action against one ARC. By then, the business model itself has changed because, we, the taxpayers, have kept paying money from the exchequer to clean up bank loans. 14 lakh crores over the last 10 years has been paid out by taxpayers through the finance ministry to recapitalize banks and clean them. So now the number of bad loans itself is low. And again, these dodgy deals are limited to a few. There's not enough business to do this for 27 ARCs. Some of them are closing shop. Now, let me give you 3 examples of other cases which the RBI is still not looked at. The first is a media report which says SEBI is looking into a case, again based on a whistleblower complaint. Edelweiss also was a whistleblower. SEBI is looking at a whistleblower complaint about Diwan Housing Finance Limited, collapsed in 2018 soon after ILFS, was acquired by the Piramal Group. Now, DHFL loans were sold by the Piramal Group at a deep discount to an unlisted entity. So here's how it happened. Diwan Housing went belly up. It had loans of 90,000 crore, but bidders were willing to pay only about 30 to 32,000 crore. Piramal's got it for 32,000 crore. Everybody else lost out. So Piramal's took over the company, renamed it, and now it decided that some of the loans which it had inherited would be sold at steep discounts to their own unlisted group entity. This then went to an ARC and further to the original borrowers who bought it back at a high profit through the ARC route. Who made the money? The unlisted Piramal company, not the listed one. Who benefits? The Piramal group. Who loses? Ordinary investors. Now, an ARC facilitated this deal, clearly a double whammy for ordinary investors. Take a second case. This involves, again, the same Diwan Housing, which had made a 2,000 crore loan to a company, I'm calling it ABC Limited, before it collapsed. That loan itself was fraudulent. That has come out in an audit by a top auditor called Grant Thornton. So, fraudulent loan. Now, DHFL was acquired by Piramal, name changed to Piramal Capital and Housing Finance Limited. Meanwhile, ABC, which had this 2,000 crore loan, also went bust. So, it went to the bankruptcy process. Now, what happens is Piramal Housing Finance assigned this 2,000 crore fraudulent loan to an ARC called XYZ ARC. This XYZ ARC is part of the same biradari. It is set up by a realty company, which is very controversial, whose promoter has done jail time. So this company, first of all, with these kind of antecedents, is fit and proper to run an ARC according to the RBI. It takes this loan, fraudulent loan, knowing fully well it's fraudulent. And now in the ABC resolution process, it says, I'm a financial creditor. And they are admitted. Now, if it's a fraudulent loan, it is out. It has no business for anyone to make claims, but it is admitted to the process. In the bankruptcy process, there is a committee of creditors. Lenders form a committee, and depending on how much they are owed, they have a say in the final resolution. So 2,000 crore makes this ARC a 80% vote share in the final resolution based on a fraudulent loan. I'm repeating that again and again. What does this really mean? It means that a fraudulent loan has been legitimized with Piramal selling it to an ARC. Why did the ARC buy it is a good question. How is it admitted to the bankruptcy process? Another good question. Who loses? Home buyers of ABC who are at a lower level with less clout than this fraudulent financial creditor. RERA, RBI, everybody is watching. I don't know what NCLT will do. This is an ongoing process, which is why there are no proper names. We will wait and watch whether it is thrown out as it should be. Third case, activist I know tells me I am investigating ARCs. When I asked why, he says he lives in a tenanted building which was owned by a trust which ran a temple also. This trust sold the whole property with the permission of the tenants to a very famous builder. Nothing anyone thought could go wrong. It was supposed to be redeveloped and all the tenants were supposed to get brand new flats. But nothing happened after the sale. So this activist began to investigate and he discovered that this famous builder had overborrowed, was in financial difficulties. So a large bank which had lent him money had transferred those loans or sold those loans to an ARC. He then discovers what is ARC all about because nobody really knows. It's in limbo. The plan is in limbo. Who has any rights? Who has purchased it? Is the ARC now the new owner? Will they have any interest in building anything? Or are the tenants as well as the trust just complete losers? The tragedy is nobody has any answers and nobody has any solution. This is how we as ordinary people are feeling the impact of what is happening with ARCs, which have played a shady role in each case. Now let's come back to the RBI. Took strict action in May 2024, but has yet to fix any systemic flaws that are affecting homebuyers. It also turns out that the 2024 action happened after a whistleblower letter of 2021 alluding to things that have started happening in 2019. So first step, RBI issued a set of regulations in October 2022. It said that ARCs should have better capital structure. It should have specified investment in security receipts, a certain amount, much more transparency in their operation and their governance. This was in 2022, which was a year after Paras Kuhad, a former additional Solicitor General, had sent a whistleblower letter about Edelweiss ARC and accused it of diversion of funds and other irregularities. In fact, Mr. Kuhad, a very respectable whistleblower, as you can see, alleged that the Edelweiss Group and its Canadian partner CDPQ had misused funds, violated norms in their ARC operations, and he did not raise these concerns with the RBI alone. He raised them with the PMO and with the Ministry of Corporate Affairs, leading to a serious probe. Edelweiss had denied the allegations. RBI was engaging with Edelweiss for more than 2 years before the final crackdown in May 2024. And RBI said that it finally cracked down because the Edelweiss management would not take meaningful remedial action despite a series of meetings with the statutory auditors and the board. Isn't this a brazen attitude? Maybe that is what led to the stringent new rules in October 2024, which are not yet effective. They'll come into effect in Jan 25. These rules are interesting. They make it mandatory for ARCs to at least join one credit information company. Why credit information company? You all heard of CIBIL. CIBIL is a credit information company. There are 4 of them. And loans that they acquire will have to be informed, and recoveries, returns, stuff like that. RBI said you have to put in place standard operating procedures. You have to maintain customer information properly. You have to centralize repayment data, because remember, if you are a retail investor, your repayment continues. Doesn't matter if a larger borrower's loans are transferred to an ARC. So they are saying all this has to be maintained properly, and every repayment, including the last one, cannot be left unreported. So when the RBI puts in place SOPs like this, the signal is all this is happening and somebody is suffering at the end of it. But you have these general SOP guidelines coming into effect in Jan 2025. What about resolution of those who are suffering till now? We don't know. From January onwards, they will have to prioritize grievance redress. The stricter rules are clearly also in preparation for a flood of retail and microfinance loans and defaults that are headed to ARCs. Already, several banks have sold packets of retail loans and microfinance loans to ARCs. In fact, the rating agency CRISIL says that sale of retail stressed assets already very high. At the same time, the whole ARC business is slowing down because the growth in bad loans has stopped. After 14 lakh crore written off over 10 years, hopefully sometime it will stop. These are write-offs that have happened. New loans can still get created, but just now the business is low. Also, the government formed the National Asset Reconstruction Company Limited, whose security receipts issued in lieu of the bad loans that they take have a government guarantee. This has become more attractive to lenders than private ARCs, which is why many of them are shutting shop. Among them are Aditya Birla, there's another called India Resurgence Asset Reconstruction Company, there is another called Asion Revitalization Private Limited, and Lone Star India Asset Reconstruction. These are among the few big ones of the many that have shut down or not starting. But remember now, retail loans are going there. And RBI so far only issued guidelines and motherhood statements, which get effective in Jan, which means the first that RBI will act on it, if they don't follow the rules, is maybe a year later, if they comply with everything by Jan 2025. That means retail investors are in for a pretty tough time. Tighter regulation, more transparency, and competition from the state-owned ARC is all very good, but they may make it difficult for indulging in dodgy deals. So it may all be very good for the system, but hapless retail investors and home buyers who are badly burnt will continue to pay the price in the interim. We need RBI to act on that as well. If you agree, get together and raise your voice, because the number of people affected are already in tens of thousands. Share this video if you agree with what I said. Thank you.